Welcome back to another video, and today we are here to talk about one stock in particular and why I think that this stock actually has a very compelling case behind it. This is one that I've been researching for a while and one that a lot of people know very well, and yeah. So if you do enjoy this video, be sure to give it a like, also subscribe to the channel. I'd really appreciate it. We're nearing 200 subscribers. It means the world to me. Thank you. Let's get right into it. So the stock we are talking about today is, you guessed it, Tesla. So Tesla stock is a very controversial stock. There's a lot of people that love it. There's a lot of people that hate it. I am someone that feels indifferent about it. I neither love nor hate this stock. Their earnings are coming up very soon here, actually. So it's going to be some, a raise in volatility for the next probably week or so. But, that's to be expected when a stock is going through earnings season. But, I mean, if we check this stock year to date, they're down 15%. They were down 43% year to date. So this was a lot cheaper of a stock, a while ago, but they're still down year to date. That's, the least to say. They were almost at $500. I think, their 52-week high is $488. Right now they're $330. So this is a very volatile stock. They move every which way in every direction, and this is a stock that, it moves a lot. That's all you can really say about it, is this one moves like nothing. So the thing that I want to talk about with Tesla is my bull case, because I do believe that Tesla is going to be worth more than this, maybe a year from now. I don't see Tesla dropping a lot more than this, just because of the position that their CEO, Elon Musk, is in, the position that he's in, and, the position of power he's in, where he can make decisions on behalf of what's going to happen to Tesla stock, and, just regulations and rules that he has say in, and he's the CEO of this company. And I think there's a lot of things he's going to be able to get done. So what I wanted to check out right here is Tesla's big catalyst. Piper points to Austin robo-taxi launch. So that is the main, I'd say, catalyst for Tesla at this time, is their robo-taxi launch. So I made so you can see that Tesla's market cap is $1 trillion still. Still $1 trillion, but adding this whole other aspect into their business, that wouldn't hurt. The autonomous driving sector is projected to increase a lot over the next couple of years. One of the biggest leaders in this actually is Waymo, which is owned by Google. So they actually, they're doing very good. This past few months, year to date, they were down 24%. But now they're only down 2%. So Google is actually one of the biggest leaders in the autonomous driving space, with Waymo. And then, there's other people trying to dip their feet in the water with these autonomous cars. I mean, Tesla has autonomous driving, so the robo-taxi probably is something that they could do. They just need to actually get it out and running. But we have right here, it's Tesla's an automotive and clean energy company that leverages advanced artificial intelligence in its autonomous driving technology and robotics initiatives. On May 22nd, Piper Sandler analyst Alexander Potter reiterated an overweight rating on the stock with a $400 price target. So the stock is, let's go back to Tesla. Tesla is only $330 right now. So $400 price target is pretty good increase. That's over 20% right there. That wouldn't hurt. And even though Tesla has been facing several challenges, such as weakened delivery outlook and a lack of clarity on new products, the stock has still managed to rally. That's true. And yeah, there's a lot of hope for Tesla. This one says if you were looking for an AI stock that is more promising, it's trying to give an advertisement. But okay, so I think that Tesla is, when you're investing in Tesla, if you're investing in it at this point, you're investing in it with the speculation that robo-taxi is going to take off. I think that Tesla car sales are fine. What they're doing, with every other part of their business is fine. And the thing that they need to do that people are expecting is the robo-taxi launch. And I wouldn't be surprised if they announced this in their next earnings. I wouldn't be surprised if they actually had a foolproof plan and they were actually, going in on robotaxi. And that's why I'm making this video right now, is because I think for their earnings, they could announce that robotaxi, is taking, they're doing it. They're doing a robotaxi and it's going to happen. So I also wanted to check this out. Tech bull Dan Ives predicts Tesla's robotaxi launch will catapult the company to a $2 trillion market cap, almost double its current value. So yeah, I mean, this company is a $1.06 trillion company, so it pretty much would be double its current value. And yeah, I mean, this is an article where he just talks about if they do choose to launch this, if they actually make this launch happen. We view this autonomous chapter as one of the most important for Musk and Tesla in its history as a company. The idea of Tesla's self-driving technology would enable it to have a fleet of robotaxis and is central to the investment thesis for the company. That's true. So kind of like Airbnb, where you can sort of add or subtract your house or your guest room. The best case scenario of the robotaxi rollout could essentially double Tesla's market cap by the end of 2026. That's very fast. Tesla doubling that fast at this size, that's pretty good. That's kind of unbelievable almost. And the excitement of Tesla's most bullish investors, however, put off some others. Earlier this month's investment firm Baird downgrade. I don't really care about these analysts and what they're suggesting to buy the stock for. It's not that important. It's kind of just all politics at that point. But yeah, I mean, he's kind of just talking about how if this does happen, I mean, this is important too. Tesla's robotaxi would not be the first autonomous vehicle approved for use in the U.S. Alphabet-owned Waymo is currently available in San Francisco, Phoenix, Los Angeles, and Austin. This week, Waymo announced it had applied for a permit to conduct a test for its autonomous vehicles in New York. Tech giant Amazon also has an autonomous vehicle initiative called Zoox that is slated to launch in Las Vegas later this year. So I didn't know Amazon had that, but I think this is the next sector for a lot of these brands, and whoever comes out on top out of, Amazon, Google, Apple, Tesla, maybe even Nvidia, maybe Microsoft, maybe Meta, I don't know. But all of these big giant tech companies, I think, are going to try to get into the autonomous driving space in one way or another, because that is the next big thing when it comes to, what people are doing and what these big companies are trying to make money on. It's not a bad idea. This is, just a really new idea, and one that people are probably going to, you're going to make money off of this for years to come. The autonomous driving space is kind of like something that just came out. I don't know. Waymo has probably been around for a year, maybe 2 years. But I mean, this is something that's very new. And if you get into it right now, I think that it's really just at the early stages. I think people driving for Uber could be put out of business because Waymo is so cheap. And I've seen Waymos in San Francisco. There's a lot of them. There's a lot of Waymos, and they're always working, and they're always doing their thing, and they're making a lot of money. They're making a lot of money for Google, and I really like investing in Google for that reason. This isn't about Google, but I really like investing in Tesla because they're gonna have the same thing. So I also wanted to check out a Tesla option. So there's two options I have for you guys, and both of them are good plays. But the first one I'd make, this is expensive, so I also want to show you a way to get it cheaper. But this is an expensive option, so it's $13,775 for an option. I'm not going to pay that much for an option in relation to my portfolio size. Maybe your portfolio is bigger, and you want to, throw out that much for an option. That's cool. But I do think that Tesla I do think this is a good option. I think that, and this isn't that unrealistic for them to double their price in, 2.5 years. Their price could be more than doubled, I think. But I mean, look, if their price does double, you're tripling your money, pretty much. So I mean, there's some reason to, get in these options. I think that they're going to announce the robotaxi. They're going to roll out very fast, and their CEO is in a position of power where he can, kind of bypass some of those permits and get that pretty fast and get everything up and running. So I really don't hate that. But the option and another way to get this cheaper actually is you go to Robinhood, you go trade Tesla options, and let's see this leap right here. So it's this far out. We'll buy a call. So which call were we buying? We're buying the 290. So if we buy the 290 call, look at this. It's $13,860, but then we sell a call against it. So let's sell an out of the money one. Tesla, if it hits 400. And then now our option is only $3,500, and we could make 7,500. So that's just something for you guys to see. I mean, it's pretty good way to get a cheaper option. Poor man's covered call, that's what it's called. I've made videos on it actually pretty recently. I have, my favorite option trading strategy, because really, I mean, we just took a $14,000 option and took it down to $3,000. Our risk is a lot lower. Our max profit is lower, but our max profit is still double our risk. It's a 2-to-1 risk to loss ratio. And yeah, Tesla only has to go up 21%. at expiration. I don't hate it. I don't hate it. I don't hate it at all. I think Tesla, because you got to think about it. Is Tesla going to go up 21% in the next 2.5 years? Yes. Yes. I mean, I don't know. That's a risk that I'm willing to take. I mean, look at this option is, I don't want to say it's free money, but I think Tesla's going up 21% in the next, 3 years. At some point in the next 2.5 years, Tesla is going to be 21. The stock price of Tesla is going to be 21% higher than what it is right now. That's not crazy. That's not a crazy thing to say. I think that's going to happen probably. I might actually buy this option at open on Monday. I really like this option. That's a very good deal. I think it's pretty easy to say that Tesla is going to be up that much. Within the next 3 years, or within the next 2.5 years, Tesla is going to be worth 21% more than it is right now. That's an easy take for me, honestly. So I really don't hate that. I really like that I just found that option. So another one that I was actually thinking about was one that is expiring a little bit sooner. This is a Tesla. This one's a cheap one, but this is one that I liked. I mean, for Tesla, it's cheap. It's $1,000. So this is a $340 call, and this is what I like because of their earnings. So Tesla's earnings are coming out the 23rd. So I think August 1st is enough time after their earnings to kind of let it settle. But we can see right here, I don't hate the 340 one. I think that that's a good one. Oh no, I don't want to build this crazy option chain. I want to buy a 340 Tesla call. So if we buy this call 13 days out, you can see Tesla is up, 10%. We're up double. I think their earnings are going to go more than 10%. I think their earnings could go 30. So I think they will announce something about the robotaxi on their earnings. That's a given. But I think they're going to have some things, kind of planned out too. Kind of like they're going to have a plan now, because last earnings and the earnings before that and that, it's kind of like, oh, it's a sector of our business that we want to get into, but we're not quite in it yet. And, they're kind of just spitting a bunch of, what people want to hear. And that's fine. That's fine. But I mean, we need to hear that it's actually going to happen. We need some solid plans. So I think that's what's going to happen this next earnings. I'm pretty sure. I don't hate this play. I do like the other one a little bit more, but I mean, look at this. Tesla goes up 30%. You're up 8 times. 8 times what you put in. Tesla only needs to go up 6% for you to break even. With how volatile the stock is, I think it'll go up 6%. And if you're betting on, them going up after their earnings, this is a great way to do it. And I mean, you can even go more out of the money if you want. Your break even gets a little bit higher. But I mean, if you think Tesla's going to go up 20% anyways, and you want to throw, a $100 lottery ticket at it, go for it. If Tesla does actually go up 20% by expiration, you're making a pretty penny from your $100 investment. So I don't hate that. But Tesla does have to rise a good amount. That's not that crazy either. Tesla can do that. But that's why I like this one. It is more expensive, this option. Do not get me wrong. But the poor man's covered call that I had right here, I really like this play. If we buy, what was it for? I think it was $290. We bought the call and then we sold one at $400. Yeah, no, I really like this play. I really do. I think Tesla is going to be, I mean, you can do this on a lot of stocks, but do you think, like Amazon, do you think 2.5, like, there's a lot of stocks you can do this kind of play on, but like, I mean, if you don't believe in Tesla, that's fine. Do you believe in Amazon? Do you believe in Amazon? Probably. So if you believe in Amazon, let's go check this one out. Let's do the same thing. We're going to get an in the money call that we're going to buy. We'll buy one with a delta around 75. That sounds good. $6,000 option. Very expensive. But then let's sell an out of the money option, and let's say 300, pretty high. But you see, our max loss is 4,000. Our max gain is 6,000. Do I think Amazon's going to go up 30% in the next 2.5 years? Yes. Unless the economy crashes, I think Amazon is going to go up 30% in the next 2.5 years, and then you can even get it smaller. So if you take out the call that you're selling, and then you get one that's cheaper. Let's say you get, you sell a call right around here. Your price is cheaper, and Amazon only has to go up 21%. So the risk gets shortened, but you see Amazon has to rise less and less the shorter your call gets. So it's like this is a good way to make money. You know what I mean? This option strategy is pretty safe. That's why I like it so much. And yeah, guys, I really hope you do get into Tesla. I think that before this earnings is the time to get in. There's been a lot of times to get in, but I think now is one of those last times where it's like, okay, they're going to actually do it this time in the earnings. So yeah, guys, that's my opinion, and I think that it's a good time to get in. So that's it for the video. If you did enjoy it, be sure to smash the like button. Also hit the subscribe button. We're almost at 200 subscribers. I really appreciate you guys for watching. Thank you. I'll catch you in the next one. Peace.